So, what's next for Tether? It sounds like they are facing some good times right now. Are the good times going to continue to roll for Tether, or will they be facing, additional hurdles, obstacles, anything like that?
Right. So right now, I would expect things for Tether to sort of stay the course as things have been going. I mean, they just released Q2 financial results, and they were a bit confusing because um, if you read just the top line, it's excuse me. If you read just the top line, it would suggest that the company made about $850 million in profit in Q2, which is a little bit more than half of what they made in Q1, which was about I think $1.48 billion. However, like we kind of looked a little bit deeper at those numbers, and something did not quite add up because um, there's really two big inputs when you're trying to figure out the profitability or I guess the revenue generation of a company like Tether that produces stablecoins. One, what is the total pile of investable assets? How much money can they actually put into treasuries, money markets, whatever? And then what's sort of like the Fed's target funds rate? Because all of the assets that they invest in are sort of based on the target interest rate. And for most of Q1, Tether's investable capital base was about 65 to $75 billion, and for the most part, it was somewhere in the high 60s, low 70s. After the collapse of Silicon Valley Bank in March, it went over 80, and it stayed there for the entire quarter. And on top of that, the Fed raised interest rates, or its federal funds rate, twice for a total of 50 basis points. So they had more money to invest, and all the products that they invested in were providing greater yield. So our estimates suggest that they may have made as much as $1.92 billion in operating profit in Q2. Now, what does this mean? This means that if they're only reporting an $850 million profit, then there could potentially be about $1.1 billion that is not yet accounted for. In the statements that they released along with this attestation, they highlighted how they made some investments in energy companies and also participated in a nine-figure share buyback, about $115 million or so. But that still could leave somewhere between like $800 and $900 million that we're not exactly sure where that went. We reached out to Tether, but they have not answered yet. And one possible explanation is that they paid out a cash dividend to this founding team because right now they have assets well in excess of the liabilities that they are accountable for in the form of USDT. That would be totally legitimate. It's a company. Founders are allowed to take cash dividends when they have a good quarter, but we are trying to confirm that.
Is that normal where the numbers aren't adding up and a number that big, I believe you said $1.1 billion is not accounted for? Is this par for the course or should people's, red flags be raised?
Well, I mean, none of this is par for the course. I mean, to be perfectly honest, I mean, for a while, Tether, I would expect that when the company was launched years and years ago, and again, it was started all the way back in 2014. It really took, I would say, like 7 8 years before it kind of hit this kind of mainstream moment. So I would expect that the company has made the vast majority of all of its profits in the last 2 quarters. So, I mean, none of this is quite unusual, but there's nothing wrong about it either. I mean, previous concerns about sort of the solvency of Tether really kind of focused on whether or not they had enough assets to account for every single token in circulation. In this case, according to attestations provided by a pretty reputable accounting firm, they still have assets in excess of liabilities of more than $3.3 billion. So if they take some of that off, this $3.3 billion surplus would be net. So that in and of itself doesn't actually raise flags. It just kind of speaks to the moment that Tether is having, and just how profitable this business has been in what really is a perfect storm of factors.